Welcome to Markets Now. I'm Michelle Rook along with Chip Nellinger, Blue Reef Agri-Marketing, and a down day in both grains and livestock futures on Wednesday. And of course, so let's talk about the WSDA report and its influence, first of all, on the grains, especially soybeans, Chip. 300 million bushel ending stocks figure, 100 million bushels above the trade guess. How did we get there, and what do we need to do to work that into prices now?
Yeah, I think that maybe been the biggest shock of today was that soybean ending stocks were as high as they were at 300 million. And now I think it's always tough in the market's mind to kind of decipher these reports. So what happened is the USDA dropped out the 4 million acres from the June 30th stocks and acreage report in their economic model with that going lower and tightening up the supply. They felt that, and they did raise the average farm price by 30 cents a bushel. As you do that, you have to assume that demand goes down. So we had a corresponding cut of 135 million bushels out of bean demand. And so the market initially took that as bearish. It is bearish because the carryout was way higher than expected. But are we going to achieve a 52 bushel national average yield? I think the next 6 or 8 weeks are still critically important, and Mother Nature is going to have the final say-so there.
So unless we actually see a yield cut going forward, have we put a top in the market in terms of price?
Well, we may have in beans. I still think that a couple levels here. First and foremost, last week's lows at 13.15 and a half. If those hold this week and we can hold that and recover into the end of this week or the first part of next week, I think that bodes well for beans, and maybe they're a little less certain of a 50 to 52 bushel bean yield than what the USDA is right now. They still have plenty of time to change that. If we have topped and we go lower, you could still correct this thing $1, 80 cents to $1, maybe more from here, and still stay above those lows from a couple months ago and still respect some of the bigger retracement levels, because we've had such a huge move and such large swings in this market. So I don't think you've seen the end of the volatility, and we haven't seen the end of the weather risk either. We've got 6 or 8 weeks to go before we find out more about whether we can achieve this big bean yield.
So we did get a cut in corn yield by 4 bushels per acre. Was that a victory? Because USDA didn't necessarily, or hasn't in the past, come down in the July report on yield.
Yeah, pretty rare for them to come down in corn yields. They're obviously basing that off of the dry June and the crop conditions as of the end of June. I think given the market's reaction, maybe they were a little disappointed, or maybe trading even a bigger cut in yield. Again, Mother Nature still has a long way to go before we know what this crop size is. We might be debating it all the way until the January crop report. But I think the bean market really has more influence on corn than what yields do from here on out. If we have topped beans and they're going to put a bigger break in, that probably opens the downside potential up even deeper now because of the tightness of beans relative to this 2.2 billion bushel corn carryout, which is much more loose and plentiful.
So unless we get another yield cut from USDA, which they may offset with, lower demand, do we go how low? I mean, what's your price projection here in terms of the corn market if soybeans have topped?
Yeah, if soybeans have topped, I still think that you could see some lows here, maybe into the 430s, 440 range on December corn futures, assuming that we don't push our carryout much north of 2.5 billion. If we're going to end up closer to 2 billion before it's said and done, and beans haven't topped, then we may be very close to a short-term low in here. So I think that the market action going into the close on Friday and the first half of next week really is going to kind of dictate how deep we go in corn. But the bear case right now is that demand's still too high, and the USDA is going to cut corn demand as we go forward, and that's just going to add to the bottom line carryout number.
And we did see an increase in ending stocks by 30 million bushels. Some of that came from an increase in winter wheat production, yet spring wheat, I don't know, it just seems like from what we're hearing about weather problems, that may be the wild card that may pull the overall wheat number down. What do you see?
Yeah, could definitely be the wild card. Got some dry weather, in the northern plains, the Dakotas, and into the Canadian prairies. I think there's always the political and Ukraine, Russia uncertainty there as well that could flare up at any point in time. The thing about wheat is it didn't take this market, this trade today very well. I think it kind of, went lower in conjunction with corn and in sympathy with corn. But the
Right.
funds already have a big short position. So I don't know at this stage what's going to be so bearish now that we're coming out of harvest here in the plains to really get, a huge drop in wheat. So I think wheat's more of a follower. I think it's probably pretty fairly priced. And I wouldn't be surprised if we can sift through this, that wheat kind of stabilizes and maybe tries to rally, but it will be tied to corn somewhat. If corn hasn't found a low or still has further to go as beans pull it lower, then wheat's going to follow along as well.
Yeah, I totally agree with you that wheat went in sympathy with corn, but we have 16-year lows in US ending stocks and the market hasn't respected that for a long time, right?
Yeah, it just goes to show you how much of a world market it is, that the
Yep.
market's fearful of this huge supposed Russian crop that may be put out. But yeah, there's some different pockets of the world. European wheat prices, the Canadian spring wheat and our spring wheat, is a question. And so there's just enough out there that I don't know that wheat has to go a tremendous amount lower right now. But it's not going to divorce itself from corn and beans if we're into a downswing in those two markets. So it's more of a follower in my mind.
Yeah. And world ending stocks did get lowered on wheat, but I know the market rarely seems to trade that. Okay, let's move over to the cattle market. We made new contract highs this morning in the live cattle futures, ended lower in both live cattle and feeder cattle futures despite lower corn. How bearish is that?
It could be very bearish. If we follow through to the downside into the end of the week, I think you could be talking about maybe not the top, but certainly a top that is here for maybe the next few months. I thought it was horrible action that corn's getting beat up and feeders reverse and go lower. The funds likely are a little bit overextended on the long side right now. They have a huge long position built up in both of those markets, and so I thought that it was a pretty poor performance across the board in the cattle market. And if we don't hold it together into the end of the week, you could really open the door up for a much deeper break as these funds and speculators maybe take profits on their long positions. It's been right to have been long for many, many months in the cattle complex, but you have to question whether we just put kind of an intermediate term top in here.
Yeah, and further disappointment came from the fact that we had a bullish CPI number this morning and outside markets, and economically we look a little bit better. So that was further a disappointment for cattle.
Yeah, it really was. The dollar had a huge down day. I think the thing that's concerned me a little bit, we've been struggling on our exports, and this domestic demand looks like maybe the high prices have really kind of slowed the domestic consumer of beef down. And that's what happens. High prices
Okay.
cure high prices and kill demand. And that's something that we really have to watch closely.
And hogs seem to follow cattle or took the same path here after being hired this morning. And so, what's your thought there? Because technically it looked like maybe we put a reversal in the August hogs already last week, but then you followed it up with strong cash and cutouts.
Yes, but midday cutout quite a bit lower. Horrible action again, with lower corn prices, lower meal prices, a dollar that just got beat up today. And so, we've had all this pent up buying into California ahead of the Proposition 12 issue. Maybe we've seen the end of that. And if that's the case,
Okay.
again, we may be due for a much deeper break as that kind of, if we are behind all that buying that's going into California here the last few weeks.
All right. Thanks for joining us. That is Chip Nellinger, Blue Reef Agri-Marketing, and that is Markets Now.